Yes, my dear. Very good afternoon. Yeah, just give me a minute. Just a second. Yeah. So, as part of our, as per the plan, we are supposed to look at today, as usual, like two standards. I'll try to revise it. Each and every concept I'm going to complete it in the given time of 1.5 hours. Okay, right. So today I would like to start with first I would like to start with accounting standard 2, that is nothing but inventory valuation. Yeah, that is nothing but inventory valuation. Yeah. Um yes. So now let us start with the subject. Yes. See, inventory. Yeah, we'll solve some one or two good sums, so which will be helpful for the quick revision of 100% subject. Okay, towards the end. At the same time, we will be solving the MCQs also with respect to accounting standard 2. First, I will close accounting standard 2. Then I will be getting into accounting standard 11 in this session. Okay. Accounting standard 2, inventory. Inventory means what, my dear? Inventory is what? Inventory is an asset. Correct? Inventory is an asset which is held for. Yeah, it is held for what purpose? They will say three purposes. Which is held for sale. Which is held for sale in the ordinary course of business. In the ordinary course. Yes, in the ordinary course of business, if it is held for sale, then it is going to be called as inventory. Right. At the same time, right, let me change this. Yeah, it is an asset held for this. And the second purpose, which is right, which is going to be consumed, yeah, which is going to be consumed or which is going to be used. Yeah, used. Both, I say both in the process of production. In the process of production. Yeah, in the process of production for what? In the process of production for such a sale. For such a sale. So what is that sale? Such a sale in the sense the sale in the ordinary course of business. If it is held for the purpose of, okay, if it is held for the purpose of sale in the ordinary course of business. When I say if something is held for the purpose of sale, that should be called as finished goods. Correct? Na? WIP is not held for sale, raw material also not held for sale. Correct. WIP is going to be consumed or raw material also is going to be consumed for the purpose of production of such item which is meant for the sale. So which is consumed in the sense either WIP raw material, which is going to be either used or consumed. This word also can be used. That's why the spares, parts, correct, loose tools, these things are also going to be part and parcel of inventory. Got it? Correct. Sir, inventory, how do you value? Yeah, that's correct. Now, if you ask any student, they will say inventory valuation, that is nothing but cost or NRV, whichever is lower. Agree? Right? Isn't it, my dear? Yeah, is it audible? Whoever is listening can answer, just answer. Right. So cost or NRV, whichever is lower. Now the question is what? Yes. First topic number one, what do I say? What is the cost? That you are supposed to determine it. Second topic is what? What is NRV? That you need to determine. Out of which whichever is lower. This is easy. This is just one line or two lines. May will be able to complete it. Correct. So now let us go to cost. Let us determine. Correct. Now let us determine what is that you are supposed to determine. What do you mean by cost? Yeah, what the standard says, cost includes. Yeah, what all it includes, sir? Cost includes three types of cost, it says. What is the first one? First one, what it says? This is cost includes cost of purchase. Okay. Next, cost of conversion. Yes, it is cost of conversion. Yeah, next one is all other cost. Yes, all other costs. All other cost to bring the material, to bring, correct, all other cost to bring the items, to bring the items, correct, to bring the inventory to the present location and condition, to bring the inventory to the present location, to bring the inventory to the present location and condition. Yeah, to bring the inventory to the present location and condition, that is what is the matter. Next, what do you mean by cost of purchase? Correct na? What do you mean by cost of purchase? Tell me, my dear, what do you mean by cost of purchase? Cost of purchase is going to be, correct now, what are the items you actually purchasing, right? So what is that you will purchase? The cost. Suppose example, you are manufacturing one laptop. What do you need? You need a screen, you need a keyboard, you need so many things, correct now. What all you buy basically, that is supposed to be, that's why what all you add it here, we'll add it like basic price, whatever the item you purchase, that number, correct now, plus non-refundable taxes, non-refundable tax, okay na? Yeah, when I say non-refundable taxes, then automatically GST will not come in. If you are, the simple question, can I take the GST input credit? If you say yes, then it is not, it is refundable na? You are paying in one hand and you are able to get back the same thing from another hand, agree? So that's why you should not take that information. So plus what else, my dear? Plus freight cost. Yes, obviously, plus any brokerage or commission, whatever you are going to pay, that is also yes, agree, correct na? So again, plus all other cost, in simple words I am going to close it, all other cost, all other cost, right, which are directly related to a purchase, which are directly related to, yeah, which are directly related to purchase. Yes, what all cost you are supposed to spend. When I use the word directly related, I already told you in the last session, that is in accounting standard 17. When do I say it is directly related? When do I say it is directly related? I can use the word directly related. It is incurred only because of it. Correct. Now, if I have not brought the inventory, if I have not bought the inventory, I would have not spent this. Then it is directly related expenditure. Minus, if you have any discount, correct now, if you have any discount, or if you have any rebate, whatever it is, that is going to be reduced from this one. Say this is what my cost. This is what my cost. That is cost of purchase. Okay, this is cost of purchase. Agree, my dear? Yeah. Now, what about the cost of conversion, sir? Yeah, this is next point is what? Cost of conversion. You purchase the raw material cost is ready in the first point. Over, right? Labor, correct? Now, labor help is obviously required. Plus, you will be having overheads, correct? So, what is labor? Labor is obviously a variable cost. You still, and overheads can be fixed as well. Correct. Now the question will come what? Allocation of variable, correct? Allocation. How do you allocate? I will be spending, say example, some variable cost. I will be spending. How much you spent? Some X number I spent. But how much you have incurred per unit? How much? Correct. Now allocation per unit. Yeah. If it is variable cost, it is very simple, my dear. Correct. Now, right. There are two words before going to answer this. First point is what? First point is what? Actual production, actual capacity. We say actual capacity. What do you mean by actual capacity? Actual capacity means actual number of units you produced, actual number of units you produced. Got it? Right. Next, second point is equal to normal capacity. What is normal capacity? That is normal production, my dear. Yeah, the normal capacity in the sense normal production, normally under the I mean normally in the sense under normal circumstances, under normal circumstances, how many number of units that you can produce it in general, normally, correct na? Normal production. Maybe because demand is not there, that's why you may be producing less, correct? Yeah, so there may be, and maybe your labor is not that efficient, that's why you are producing less. So there are number of reasons why you are producing less. I hope you understood. Correct. So when I say allocation of allocation per unit with respect to variable, correct? Now I'm telling very clearly, variable, what are you supposed to use? You are supposed to allocate based on, yes, you are supposed to allocate based on what, my dear? Based on actual capacity. Yeah, based on actual capacity. So that means variable, correct now, that means variable overhead, variable overhead per unit. How do you get it? Correct now, what is the expense amount? Correct now, simple, you are supposed to use expense amount Yes, expense amount divided by actual capacity. Actual capacity, how much you actually produced. That's all. That is going to be per unit cost. Right, sir. But what about the fixed overhead? Correct. Now, what about the fixed overhead? How do you allocate this number? Fixed overhead is going to be allocated, right? It is not based on the actual capacity, not based on the normal capacity, but based on the whichever is higher. Okay, so what is that you are supposed to write it? Actual capacity or normal capacity, whichever is higher, that is what the rule principle you are supposed to follow. Actual capacity or normal capacity, whichever is higher. I hope you understand. Yes, exactly. Right. So suppose rent is there. Yeah, rent is equal to, isn't it a fixed overhead? Yes, it is a fixed overhead. Correct na? So how do I allocate per unit? First you have to get the number. Yeah, say example situation number 1, situation number 2. What is your actual capacity? Actual capacity 10,000 sir. How much is the normal capacity? 12,000 sir. Situation number 1. What is actual capacity? 15,000 sir. But normal capacity 12,000. We did overtime and we got somehow great production. You got it. All is excellent. We don't have a problem. But rent per annum. Rent per annum is equal to how much? Just say some 100 lakh rupees. Rent per annum. Okay. Now under situation number 1, E situation. Correct. Now what are you supposed to do? When I say rent per unit, how much are you supposed to allocate it? Yeah, what is the rental expenditure you have spent? Whichever is higher is how much, my dear? 12,000 you are supposed to take it. Are you getting my point? 12,000. So when I say 100, correct, 100 lakh, correct, 1, 2, 3. Yeah, divided by 12,000 if I keep it. Yeah, that comes to how much, my dear? This is 833 rupees. You are going to allocate it per unit. Yeah, try to understand here. What is the actual cost? Actual overhead is how much? Actual overhead is equal to 100 lakhs, sir. Okay, but how much have you allocated? Yeah, how much have you allocated? Per unit 833 rupees I have allocated. Correct, but totally how many units you produced? Sir, I produced only 10,000 units. 10,000 units into 833.33, that will come to 83.33 lakhs. Yeah, when I say 83.33 lakh, that is equal to 16.67. Yeah, see, point is here 10,000 units you produced where you actually can produce 12,000 units. That means capacity is less utilized. That is your problem. Correct na? Yeah, you produce it less should not lead to value of the asset. That is the reason. Correct na? That is the reason. What are you supposed to do? This will be charged to profit and loss. This obviously will be charged to P&L. This cannot be added to the cost of inventory. Why? If you add it to inventory, means your asset value is going up. Are you getting my point? Yeah, your asset value is going up. Your asset value is going up when you are inefficient. Agree or not? You produce lesser amount, lesser quantity, then your inefficiency is becoming your asset, which is obviously wrong. That is what we suggest. Correct na? Next situation, whichever is higher. Situation number 2 may 15,000 you are supposed to take. Same sum. Correct now. What are you supposed to do? 100 lakh divided by 15,000. Correct na? Yeah, 100 lakh 1, 2, 3 divided by 15,000. If you take it, that will come to 666.67 will come. Agree? Correct. So actual overhead how much, sir? 100 lakh. Yeah, how many units you produced? I produced 15,000 units. 15,000 into 666.67, again it will come to 100 lakh. Yeah, here you worked more efficient. More efficient means you are supposed to reduce the cost of the price. That will lead to a competitive price. Agree, my dear? Exactly. That is what you are supposed to do it. Got it? Right. Just a second. Yeah. Right. This is the basic thing that you need to follow. Right. So conversion cost we have discussed. Right. What about the other cost? I told you now. What about the other cost? Other cost which are incurred to bring the inventory to the present location and condition. Sir, what are all the cost? Yeah, first one is primary packaging. Correct. Now, primary packaging cost. Yes, this also is supposed to be. This also is supposed to be part and parcel. Second one, yeah, what is the next one we are supposed to do? R&D, not R&D cost, quality department cost. Yes, quality department. Yes, in the quality check department, whether people will be there or not, yes, they will only once after the quality check only, correct na? These quality people will not participate in the production, but these people will participate indirectly. But is it necessary? Very much necessary. I hope you understand. Even the management, correct na? Management cost also, But management cost, we don't take it 100%, my dear, only proportionately. Correct. If the company has got one MD will be taking care of production, MD will be taking care of sales, MD will be taking care of HR, MD will be taking care of so many activities of the company. That's why his total salary, I will not put it to the inventory. I will take some proportion. Proportionately, I will be transferring it to cost of inventory. That is a management decision exactly end of the day. Anyhow, that is not a big issue. Correct? Next, this inventory does not include, what it does not include, sir? Yes, there are some 5 points, my dear, which you should never add to the cost of inventory. You should never add to the cost of inventory. What is that? The first and foremost thing, general administration cost. Yeah, general administration, right. When I say it should not include inventory valuation mean you are not supposed to take it. What does it mean? Whatever I am going to tell, that you are supposed to charge it. You are supposed to charge it. Charge it to where, my dear? You are supposed to charge it to profit and loss statement. When are you supposed to charge it? Whenever you have incurred. Yes, immediately on occurring. Correct. Now, whenever you incur the things, then you are supposed to charge it off. One is general administration, we said. What about the second thing? Second thing is selling and distribution. Yes, selling and distribution cost, you are supposed to do it. Right. Next, third is equal to what? Third is equal to storage cost. Storage cost. Yeah, what is storage cost? That is storage cost in the sense that is nothing but go down rent. Correct. Now, warehouse rent. Why, sir? Go down may if you keep the item, it will not add any value to the inventory. It will maintain the existing value. That's why go down rent will not be taken. But go down rent also will be taken. Go down rent also will be taken only when storing is a part of production. Storing is part of production. Are you getting my point? Storing is part of production. Suppose my company is doing wine. Correct na? Wine. So what do? You will mix all those things and you will have to keep it there for number of months or number of years. So storage is correct. When you store only, that will be the item of wine will be ready for consumption, making it ready for sale. That's why under that circumstance it will be there. Otherwise it won't be there. Next, what about the next thing? Next thing is finance cost. Correct na? Finance cost also no. Finance cost, what do we say, my dear? Subject to accounting standard 16. Like that we will tell it. Yeah, what do you mean by subject? If the what is 16? 16 we already told. If the inventory is equal to a qualifying asset, then the finance cost, correct? Then the finance cost is going to be added to the cost of inventory. Otherwise, we do not add it to the inventory. My dear, these are all important. Okay, like because they are going to ask you MCQs, na? Right? Any corner of the standard they can ask you. If you read it only from the question angle, are you getting my point? Right. So then you are not going to get that. Yes, Santosh Panda is asking, if inventory is a qualifying asset, then what extent of borrowing cost should be added to the cost of inventory? Could you briefly explain? My dear, it is going to be 100%. Yeah, 100% will of the borrowing cost you are going to do it. Yeah, see, you must be taking the loan. Accounting standard 16, you go. Accounting standard 16 may specific borrowing, general borrowing is there. Correct, na? Right. So when I say inventory is, you just need to follow accounting standard 16. Sir, I have taken something. This is only for the purpose of my inventory, only for the purpose of this. Correct, na? Then the cost specific borrowing, that is. Yeah, but there is some one more thing is there, sir. General borrowing. Yes, apply the weighted average capital rate. How much has been added to the inventory cost? That much you are supposed to capitalize it. I hope you understood, Santosh. Okay, right. The next point is what? Next point is abnormal loss. Yes, abnormal loss. You read accounting standard 2, you read accounting standard 2, you read accounting standard 10, you read accounting standard 26. Are you correct now? Yeah. You read any of these standards, my dear. Abnormal loss is a loss. That should be charged to profit and loss statement. Loss cannot be capitalized. Correct now. You incurred loss. Can you say that I will transfer it to balance sheet, my asset, and you will take loan on that also? Nonsense. Agree? So it will not be added to the inventory. It will not be added to the PPE. It will not be added to the intangible asset. That is accounting standard 26. I hope you have got it. Right. So nice. So now next point is still you are in cost only. Correct. Now next point is what do I say? Yeah, very simple example I will explain you with respect to, correct now, byproduct, correct now, with respect to byproduct is one concept, right? At the same time, joint product, byproduct, joint product, correct? Two concepts are there. What do you do byproduct? Byproduct is in simple words, no, it is like a waste, not exactly that waste also. Okay, some value is there. Okay, waste. Instead of waste, you can say lesser value. I can use the word. It is lesser value product. Yes, it is a product, but yes, but it is a lesser value product. Okay, if it is a lesser value product, what do you do, sir? Yeah, that's why we do not recognize. Yes, we do not record it as inventory. We don't show this as inventory. Oh, is it? Yes, we don't show it as inventory. Suppose, yes, suppose you have incurred one joint cost. Yes, joint cost. How much have you spent, sir? I spent 100. Okay, after certain level, what has happened? Three products have come. One is A, one is B, next is C. Assume C is a joint. C is what? C is a byproduct, sir. Not a problem. Yeah. What is the worth of it? Nothing much, sir. How much is the worth, my dear? Okay, sir. I will tell you 2 rupees. What is 2 rupees? 2 rupees is NRV. Once product is come, when I sell it off, how much do you get? 2 rupees milega, sir. Okay. This is NRV. Okay, you are supposed to measure it at NRV. Okay, that's all, sir. No, not measuring it at NRV. You are supposed to deduct it. You are supposed to deduct it from where? I have to deduct it from the joint cost. Have you got it? So that means E 2 rupees, I will not show it as inventory. I will just cut it from here. So 98 rupees is there. So now what should I do, sir? E98 rupees, correct? E98 rupees is going to be allocated between A and B. What are these two things? These two are joint products. Understood? So right, that is remaining joint cost. Yes, remaining joint cost. Remaining joint cost is going to be, yes, remaining joint cost is going to be allocated. Yes, is going to be allocated between, yes, allocated between, in my example, A and B. Sir, how do you allocate this 98 rupees among these two? Yes, for that you have to refer the next small topic, that is joint cost. Correct na? Joint product करके है, you are supposed to refer that one. Okay, sir, what is joint product? Let me write it down. Sir, if it is a joint product, yeah, if it is a joint product, how are you supposed to refer that? Yes, so the simple point is what? Joint product may, correct na, initially you spend some money, right? Yeah, see, first thing, there are three ways I will tell you. Three ways means, is it a choice? No, it is not your choice. It is depending upon the circumstance. It is depending upon the circumstance. What does it mean? Correct. Now, first option, what do you say? This is the first preference if it is available. If it is not available, then second option you should go. Second option also not available, then third option you are supposed to go. It is like that. Okay. Ratio of what? Yeah, very simple. Ratio of what? Ratio of the selling price of joint products. Okay, now JP I am writing, right? JP, yes. Ratio of selling price of the joint products at the split point. At the split point, immediately when it is got separated, that time what is the value? That value you are supposed to take it. First preference. Sir, we never sold, there is no sale value only at the time of splitting. Oh, is it? Then what are you doing? Sir, after splitting, we will do further processing. After further processing, we are going to sell A dash separately, B dash separately, something like that. Oh, is it? Under that circumstance, what do you say? Selling price. Yeah, selling price of the joint product after further processing. Correct? Now, after further, yeah, further processing minus further processing cost. Yeah, further processing cost. Yeah, further processing cost. This ratio may, you are supposed to go ahead. Okay, right. What did I say, my dear? Selling price of the joint product. Yes, how much do you sell after further processing? Sir, 100 rupees. To further process, how much you spend? 20 rupees. So 100 minus 20, that is 80 is 2. Like B also, you are supposed to calculate in the same fashion. That ratio may you will do it. And the third thing, when do you apply? When if further processing, okay, if the further processing cost is cheaper, yeah, if it is very lower, a small amount, okay, if it is a small amount, right, then directly selling price of the ultimate product, that is ultimate product. What is last product is there? No, A dash is a new item. B dash is another new item. Selling that ratio of the A dash into B dash mein you are supposed to allocate it. That is the matter with respect to joint product. Right. Next thing is, next important concept is cost formula. Cost formula is given by the standard. What is cost formula? That is what your FIFO LIFO concept is there. No, that is exactly. Sir, which how do I measure cost? What is the correct? Cost formula is nothing but cost accounting policy. That's it. It is actually cost accounting policy. Yeah. For that first question, you are supposed to ask yourself. Yes. Yes, Kirtana, we'll be making revision videos. I will be making the revision videos on MCQs for Ind AS. Today only in some time I will start that. Okay, right. Yesterday I couldn't do, but today I'm going to do that. Okay, that is cost is an accounting policy choice. Done. So cost formula. What is a cost formula? Before you get into cost formula, first and foremost thing you should ask. Are you is it a specific customized item or is it a not customized item? Correct, right? What is that? Is inventory, correct? Is inventory customized? Yeah, customized. Yeah, customized item. Customized item means what? It will be used only for the said purpose. It cannot be used for some other purpose. Hope you understand. Exactly. So when I say yes, sir, it is customized. Yes, it is customized. No, it is not customized, sir. Anybody correct? No, I am not making one item for the purpose of Ravikant. I am making it for anybody can use it. Say simple one calculator I am manufacturing. Is it meant only for Ravikant's special purpose? Nothing like that. This can be bought by Ravikant, Krishnakant, Rajnikant, Irikant can purchase. Agree or not? Right, exactly. So if it is yes, it is specific item. Now if it is a specific item, then you have to specific identification of cost. Yeah, specific identification. A specific identification of cost method you are supposed to do. What is the specific identification of cost? Very easy. Correct. Now if I have manufactured something for Ravikant, no, what are you supposed to do? Ravikant के ये item manufacture के लिए कितना खर्च हो गया? Correct. Now how much have I spent on this? That much you should take a separate sheet में calculator, correct? Excel लेके calculate करके देना पड़ेगा. Okay, that is specifically identifying how much you have incurred for each item. Each item, because it is customized. You cannot say first in, first out, last in, first out. No, you cannot follow that. Okay, here what do they say? Here, if it is not it is not customized. It is for the general purpose. Okay, they say any method. Okay, with any method which is substantially correct now, which is approximates to which approximates. I will write like that very clearly. Which approximates, yeah, which approximates the original, which approximates to original cost. Yes, which approximates to original cost. Yes, if it is approximating to original cost, no, my dear, then it is. Sir, which method is there? See, first of all, LIFO method will never approximate to cost, because as per the LIFO method, it will take the old value. Suppose 2 years before whatever you purchased, no, that rate it is going to observe. That's why you are not going to accept that. So which method is the best method? FIFO method or weighted average method? Yeah, FIFO and weighted average method, you are going any one method you can follow. That's all. Only these two methods are available. Not exactly, my dear. Third method also available. What is third method called? That third method is called standard cost method. And fourth method is called what, my dear? Fourth method is retail cost method. You can follow it. But what the standard says, you can follow these two methods. But what the standard says, you are supposed to frequently review it. What does the standard telling? Frequently review whether it is correct. Now, it in the sense, last year I have taken some number. Correct. Now, last year I have taken some number. In the current year, does it make sense? It makes sense, no problem. Just have a look at it and accordingly take a call. Correct, but not blindly. That's all they are trying to tell us. Okay, that's it, my dear. This is about the word cost. Cost ka concept ho gaya. Now let's get into the next important topic, that is equal to NRV, net realizable value. Yeah, net realizable value. When I say net realizable value of the finished goods, net realizable value of the WIP, net realizable value of the raw material. We are supposed to have a look at it. Then we will see the sum. 1-2 questions I will take you through. Then I will solve the MCQ. Then we will say full stop to this standard. We'll go to accounting standard 11. Okay na? Right. Chalo. What is finished goods? Sir, finished goods. Correct na? Finished goods mean what do you do? NRV calculation. Yeah, NRV calculation is nothing but that is selling price. Correct na? How much generally? Correct. Where do you get, sir? But you are only selling na. You sales book you see. You are correct na. Sales ledger account you see. Any invoice in the past you see. Recently how much you sold? I sold for 100 rupees. Correct. Are you supposed to pay any minus selling cost? Correct na, selling cost. Selling cost in the sense these are all called incremental cost. Which mental? Incremental. What is incremental, sir? Correct. What is incremental? Incremental means it is incurred. I am incurring this only because I am selling the goods. If I have not sold the goods, I would have not incurred this. Example, it is like again brokerage cost. Correct na? Yes, I had paid to the broker. Yeah, if I have not sold it, why should I pay it to the broker, my dear? Obviously, I would have not paid it to the broker. I hope you got it. Yes. So that is the exact point. That is the exact point to be considered here. Yes. So that sets a 2 rupees I am supposed to pay broker. Then it is equal to 98 rupees. This is the NRV of your finished goods. Done. What about WIP? WIP, see WIP ka you cannot find out directly WIP. Sir. WIP if I sell in the open market, how much you will get? You will not get anything. Correct na? Simple thing here. Half manufactured one correct na? Half manufactured this calculator. If you go and sell in the market, any fool will purchase. No fool will buy. That means is it zero value? Wrong. I already did half. If I complete the other half, will I be able to sell it for 100 rupees or 200 rupees? Yes. So if I sell this means you should not take the WIP selling. That's why what do we say? That is the selling price of FG you are supposed to take. If I complete it 100%, then how much I would have realized? If I complete everything, na, you will get 200 rupees minus selling cost, say 10 rupees. If you complete 100% to know 190 rupees milega aapko. Correct. But 190 will come when? Only when you complete it. Is it fully completed? Not completed. So to complete it, correct now. What is that? The cost to complete. That's why to complete it, how much are you going to spend it? Sir, another 40 rupees I have to spend. So 190 will come, 40 will go out. That means in net what is left over in your pocket? 150. Are you getting my point? Yes. So this is equal to 150. 150 is the NRV. NRV of what? NRV of not FG. NRV of WIP. I hope you have got it correctly. See, this is FG. You should remember. The ultimate answer is going to be WIP. I hope you have understood. Correct? Right. So now next point. With respect to RM, I would like to write it here. Actually speaking, my dear, NRV of RM. Correct? Na? NRV of RM, this word I don't like it. Okay. Why you don't like it, sir? The only problem to me, see, raw material you purchase it, is it to sell? Do you want to sell the raw material? Correct? Na? You purchase from the market only. Will you go to market and will you go to market and will you go to market and sell and get the money? Am I fool here? Correct na? Why is it bought? I bought it to convert into FG. FG I wanted to sell it and I wanted to make the profit by selling FG, not by selling or losing by correct na? Raw material ka will not sell it. That's why raw material is never meant for, it is never meant for sale. Yes, it is never meant for sale. Correct now. That's why NRV is not suitable. Even though they told overally they told inventory is going to be measured at cost or NRV whichever is lower. Still that word specifically not applicable to raw material. Why means raw material ka paisa I am not going to get it by selling it to somebody. Raw material ka money will be coming to me by converting into FG. FG is going to be sold out. That is how I would like to enjoy the benefit. I hope you got it exactly. So with respect to raw material, are you getting my point? Yes. So with respect to raw material, what do you do, my dear? Yeah. With respect to raw material, what do you say? Right. First, whether FG. Say example. I will take an example. FG. What is the FG cost of FG, sir? Cost of FG means automatically raw material I purchase 100 rupees. Okay, labor ka cost I have spent 50 rupees. Overheads ka cost is equal to 50 rupees. This is equal to 200 rupees is the 200 rupees is the FG cost. Okay, 100% FG ka cost. Right. Now the question is, what is the selling? Is the selling price is greater than or equal to cost of FG? Correct na, cost of FG. Yes, answer can be what? Yes is one answer and no is another answer. Yeah, yes, yes, in the sense, what do you say, my dear? Selling price. What is the selling price? Selling price is, sir, I am selling it at 240 rupees. Yeah, very much. 240 rupees I am selling. What is your cost? My cost is equal to 200. So your answer is what? Yes. So that is 240 rupees you are selling. Yeah, correct. Now, even though, correct. Now, what is your cost of raw material here? In my question, I am writing here. What is your cost of raw material? Cost of raw material is equal to 100 rupees, sir. Exactly. Cost of raw material is equal to 100 rupees. Now market value of the raw material. Market value of the raw material is equal to 95 rupees. Even though it is 95, you should not value it at 95 rupees. Why means, how does it matter? End of the day, I bought it for 100. I will be converting into FG. FG is going to be sold. Am I selling FG at profit? Yes. If I am able to sell for 240, that means am I able to recover 100? Yes. What is asset? Asset is something which will be able to get you the future economic benefits. Yeah, if I am measuring it at 100, am I able to get back minimum 100? Yes, I am going to get back 100. Then why should I reduce it below 100 rupees? That's why the standard says, correct now, measure at cost. Measure at cost. Cost in the sense, what is your cost? 100 a. Even though, correct now, even though market value is equal to 95, you are not supposed to measure it at 95. Okay, no sir. What is second situation is what? Second situation is selling price of FG. Selling price of FG is equal to how much? Sir, that is equal to 190 rupees. Say. Now the question is, what are you supposed to do? Now you have to use the replacement cost. What are you supposed to do? Replacement cost of raw material. Today, if I replace my raw material, how much does it cost me? Does it cost me means market ko if you go na 95, correct? That is market value of raw material. Raw material value is equal to how much? 95. But this is the rate at the market. Suppose say your market is in Hyderabad. Correct? Are you supposed to bring from Hyderabad to Bangalore? Yes. So are you supposed to incur transportation cost? Say example per unit is equal to 2 rupees, something like that. Just simply I'll keep it. So 95 plus 2 is equal to how much, my dear? 97. 97 is going to be the replacement cost. Okay. You have to measure the cost. You have to measure the raw material not at 95, not at 100. 100 is already there in the books. 100 you should bring it down to 97 rupees. Because of it, 3 rupees will be charged to profit and loss statement. Okay, right, that's it, my dear. This is right topic number. Next topic number 3. Topic number 3 is what, my dear? Cost or NRV. Cost or NRV, whichever is lower. Agree? Yeah, cost or NRV, whichever is lower. When I say, correct, very simple. So when there is a item A, there is a item B. Cost is equal to, correct, cost is equal to 100. NRV is equal to, NRV is equal to 85. There is another item 100. This is equal to 102. Yeah, what are you supposed to do? You have to calculate cost or NRV. For this should be calculated individually. You are not individually you are supposed to calculate. You cannot group it. Correct na? Sir, I will do total this, I will do total that. Right? No, total mein name 100 or 85, whichever is lower. 85. 100 or 102, whichever is lower. 100. So total this is equal to 185. ऐसा लेना पड़ेगा. Got it? Hello. Let's go to the question which is there. This is part of my advanced accounting made easy book. Correct na? That this is there in the all over the country. Yes, thousands of people do use this book. Okay, right. So and again, just a second. Yes, my dear. See, this is the information about my classes. Okay, what do I am right now? I am doing advanced accounting for CA Inter. Yes, I am giving this Google Drive classes with a detailed discussion. Each and every concept with numbers and number of examples are going to be covered. The guys who are taking this advanced accounting, they will get the advanced accounting made easy book as well. And the validity is equal to 365 days. 1.8 views I am going to get you. Okay, this is going to cover not just accounting standards, it is going to cover 100% syllabus. Yeah, once you take the class, my dear, I can tell you without any doubt, you don't need to refer any other material. Sir, accountant ICA material. No, my dear, ICA material questions also are already dealt here. So that's why you don't need to refer that material, this material, not necessary. I hope you understand. Exactly. Okay, right. So this is going to cover everything. ICA material, previous exam, everything is going to be covered. This is your cost. If you are interested, you can contact any one of these things. And again, be part of my group, which is there in the description of this video. Right. So that whenever I'm taking the class or when I'm giving some lecture or something, whatever the reason, whether you purchase the book, do not purchase, that is secondary. Right. If you are interested to connect to me and you wanted to listen to me, yes, you can be part of the group so that I will be able to, right, I will be able to give this, right, understood. Yeah. uh yeah, so what about next one? This is about CA final, the CA financial reporting, that is also there. What is this, my dear? This is Google Drive classes again. This is also for CA final, which we are going to start, right? Yeah, just a second. Yeah. Okay, right, perfect. So that is the information. This is also correct. Now this is actually my advanced accounting classes, 20 to 22, 20 to 25 days maximum. Number of students already have done completed entire syllabus in 20 to 25 days. Some people teach it for so much. I mean, it's okay. My experience is different. I will be able to complete it. Correct, na? Yeah, in the given time. In 20-25 days, correctly daily 5 to 6 hours, if you can work on, no, you can finish the complete entire syllabus. This much I can give you without doubt any guarantee. I mean, without doubt, I can give you the guarantee. Right. This CA final reporting also, my dear, this is totally 200 hours of discussion because CA final is huge discussion. Correct. Now, with the number of, like, I must have done some 40 or 50, 40 to 45 number of convergence clients I have done. We are consultants for number of India's clients, listed companies, right? So I have got hands-on experience on that subject, right? I feel I will be the right person. Done. Chalo. Now let's go to our concept. What is our concept, my dear? This is the question. Look at this. Mr. Mehul gives the following information relating to the items forming part of inventory as on 31st March to correct. Forming part of inventory as on 31st March 2001. Yeah. What is this? His factory produces product X as a raw material. Correct. Now, product X using the raw material A. Okay. You have this raw material is equal to A. Not a problem. We have got 600 units of raw material A purchased at 120. Yes, purchased at 120. So if I say raw material, what is the raw material cost? Raw material cost is equal to 120. Replacement cost of raw material on 31st March is equal to 90. See, 90 rupees replacement cost. Replacement cost. That means is the value of the raw material fell down? Correct. So can I take whichever is lower? No, it is illogical. 100% you should not do that. Got my point? Yes. So that is the basic information. Yeah. Next point is what, my dear? Next point. So how do you decide it? How do you decide means raw material value is not based on the raw material cost or FMV. Raw material value is based on the finished goods finished goods. Are you getting my point? Exactly. So what is the finished goods here? Just look at here. Finished good, finished product. Total cost of finished product is equal to, correct. Now what is the FG? FG cost is equal to 320. But expected selling price of the FG is equal to 300 rupees is the selling price. So what are you supposed to do? Right, you are not able to sell the FG at cost. You are selling the FG at below the cost. When you say it is below the cost, you are supposed to use, just now I told na, you have to use replacement cost for raw material. So raw material, how many items do you have? 600 units. And what is the number you should use? 600 rupees. So that is equal to 54,000 rupees. Agree? Correct. So WIP. WIP का क्या value my dear? 500. 500 units of partly finished goods. Correct. Now partly finished goods in the process of producing X. Cost incurred till date is equal to, right. So how do you do? What is the cost of WIP? 260. Correct. Cost incurred is this number. But these units can be finished next year by incurring additional cost of 600. Right. What did I say, my dear? First you have to take, what is that you are supposed to take? Selling price of the FG you are supposed to take. If selling price of FG is equal to how much? 300. Out of that minus selling cost. Here he has not mentioned. Minus cost to complete. How much are you supposed to spend for cost to complete? 60 rupees. So 300 minus 60, that is equal to how much, my dear? 240. Right. 240 is the NRV. So when a cost or NRV, whichever is lower, 240 NRV is lower. So 240 into how many units of partly finished goods? 500 units are there. Correct na? So 500 into 240, when I take it, it will come to 1,20,000 is the value of raw material that should be taken in. Next, what about the FG, sir? Yeah, FG, how many units do you have? 1500. FG selling price cost, whichever is lower. Selling price is obviously lower. So into 300. Correct na? So 1500 into 300, when I take it, that will come to 4,50,000 rupees. So what is your total cost? Total cost is equal to 54,000 plus this plus that. That is going to be 6,24,000. So, my dear, if you really correct now, if you correctly understand the concept of it, you will feel very comfortable in answering the question. If you don't know the concept correctly, correct now, blindly if you try to do it, it may work out for one sum, two sum. Correct. If ICI changes the words and terminology, then you will be facing a problem. I hope you understand. Yes, obviously, because in when they are trying to do it in MCQ, na, they can obviously they cannot follow the same MCQ. No, they will try to change. They will try to always twist the question, right? Yeah, these are all MCQ questions which are given in the ICA textbook. Same things I have given here right now, right? But if you had followed my classes correctly, conceptually, then let them give whatever they want. You will be able to answer it. Understand? Right. Which item of inventory is under the scope of accounting standard 2? Which is under the scope of accounting. WIP arising from the construction contracts. No, my dear, this is not a WIP. This will be discussed under accounting standard 7. See, they ask the question from the scope of the standard. That I told no. They can ask. Yeah, now it's done. Yes, my dear. Done. It is reconnected. There was some small technical issue. Okay. So next, debentures held as a stock in trade. Whether it is a debenture, yeah, whether it is a debenture or share, no, it is not going to be covered. It is going to be covered by accounting standard 13. So the right answer is obviously B, raw material. Agree? Done. Next, materials and others supplied held for use in the production of inventory are not written down below the cost if the finished goods in which they are going to incorporated are expected to be. When you don't write down, when you do not write down, my dear. Abhijit, are you talking about Ind AS or AS? Yeah. So, right. When is it expected to be? Right. When it is sold at cost or above cost. Just now we spoke na raw material related. Yeah. When it is sold at cost or above cost, that means you are going to, correct na? You are going to do that. Yes. Abhijit, we are going to do it today. Right. Today we will be dealing with Ind AS 10. Yes. Ind AS 10, Ind AS 8 and Ind AS 37 related MCQs are going to be covered. Right. I will share in the group of your my group. Maybe we are going to discuss. I mean, I'll give a link. You just need to wait for some time. Okay. Right. All of the following costs are excluded while computing. All of the following costs are excluded. Which are all excluded? Selling and distribution cost. I told yes, excluded. Right. Next, what is that? Allocated fixed production overheads. Allocated based on the normal capacity. No, not like that. Abnormal wastage. Yes. Storage cost which is necessary for the part of production, no, will not going to do it. All of the following costs are excluded while computing the valuation of inventory except, okay, except which one? Which is necessary for the process of allocated overheads based on the, I think this is the one which is not going to be accepted, correct na? Yeah, storage cost, these lines are perfect. He said except, except means this is going to be included, right? That's why B bit, third B is the right answer, correct na? Next, identify the statement which is incorrect, which is incorrect. Yeah, tell me, storage cost which is necessary for the part of the production is included in the inventory. This is correct. Storage cost which is necessary for part of production, pakka it is going to be included. Administration overheads are never included in the inventory valuation. This is correct. General administration overhead will never be included. Full amount of variable production overheads are going to be included. Full amount of variable production, yes, obviously. Variable production pura amount is going to be there. Fixed overheads may there can be something will go to profit and loss when the normal capacity is higher than the actual capacity. Administration overheads are always included in the inventory valuation. This is what wrong. That should be charged to profit and loss. Administration overhead will never be included. That is the first line item I wrote in my discussion. Correct na? Yeah, this is not the one. D is the right answer. Which is the right answer, my dear? Yes. Which is incorrect. Yeah, incorrect. This is incorrect. So D is the right answer, not the B. Okay, there are some errors in the ICA book. That's why this same thing is carried. Yes. Anyhow, we are going to done, right? Yeah. Chalo. Let's, I think this is the basic. These are the answers. Yes, I just changed this one. Right. With this, we are done with accounting standard 2. I hope whoever is listening were able to catch the subject, right? Let's go ahead with what is that we are going to go ahead with. This is accounting standard 11. Let us start. Accounting standard 11. What is accounting standard 11? Effects of changes in, correct na? Effects of changes in foreign currency. Effects of changes in foreign currency. Yeah, foreign currency. Effects of changes in foreign currency. Yeah, this word, what do I write in simple words? Forex. Yeah, or simple short form, if I try to close it, I will write it as FC. Yeah, effects of changes in the foreign currency, my dear. There are totally 3 topics are there. Okay, how many topics? 3 topics are there. All right, one by one. Yeah. So what is the topic number 1? Topic number 1 means, right, how do you account for? Yes, this is accounting. Yeah, accounting of foreign currency transactions. Yeah, if the company enters into a foreign currency transaction, how are you supposed to account it? Right. Second is what? Second is conversion or translation. Translation of what? Translation of financial statements of a foreign operation. Yes, foreign operation. Getting my point? Exactly. And what about the third one? Third one is equal to forward contract. Yes, third one is equal to what, my dear? Forward contract. I hope you understood. Exactly. That is which which one is this is foreign currency forward contract you are going to deal with. Done, right? Perfect. So, right, let's deal with one by one. Just give me a second, few seconds. Yes. So, accounting of a foreign, right? Now, topic number 1. Yes, let us deal with topic number 1 independently. Right. So, what is topic number 1? Yes, transactions in foreign currency. Yes, transactions. Yeah, transactions in foreign currency. Sir, what is foreign currency? What is foreign currency? Very simple. That is other than Indian rupee. That's it. Yeah, this is other than Indian rupee. Yes, perfect. Yeah. So before you learn what is foreign currency, correct na? First and foremost thing you need to understand whether it is a monetary item or non-monetary item. Yeah, if you don't have grip on this word, then learning this entire standard will become waste. Time waste for you, actually speaking. That's why you need to Listen, understand what do you mean by monetary item. Yeah, see, actually, some people know they will study entire standard, but they don't know what is monetary, what is non-monetary. That is obviously conceptually somewhere you went wrong. Okay, so you have to write what is monetary item. Monetary item means there is a definition, my dear. That is money held. Yeah, what do you mean by money held? That is nothing but cash and cash equivalent is nothing but money held. Okay, that's all, sir. Only cash and cash equivalent is what monetary, na? No, no, not only that. In addition to that, and it can be any asset. Okay, or is it only asset? No, 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 not necessary. It can be any liability. Yeah, any liability. Okay, which is, yeah, which is, what is that? Whether it is an asset or liability, which is receivable. Yeah, asset will be receivable, or if it is a liability, which is payable. Payable. How are you going to pay? In terms of money. You are supposed to remember, which is going to be paid in cash. Money means, just now I told na, cash. So only cash payment. If it is only cash payment, then it is going to be monetary. Payable in the future, correct? Now, obviously, receivable, it's a future item. Payable, future item. Correct now. But sir, money is worth, sir. Tomorrow money is worth. I will give the goods to the customer or something. Sorry, my dear. If it is going to be payable in money's worth, yes, if it is going to be payable in money's worth, right? It is not going to be part of monetary item. Getting my point? Exactly. So what does it mean? Asset or liability which is receivable or payable in terms of, right, in terms of money. Yeah, example. Yeah, sir, I have got a debtors. Correct now, debtors. What do you do? Debtor will pay. Is it receivable? Yes, on 31st March it is receivable. From whom? Debtors are receivable. Yes. So what is he going to pay? Is he going to give you goods or is he going to give you cash? It is receivable in cash, so then it is monetary item. That's it. Correct now. Sir, there are creditors. Okay, creditors. When it is a creditor, are you going to give this? Are you going to pay them? Yes, we are going to pay them. Then it is going to be called as monetary item. Understand? Yes. Sir, there is a property, plant and equipment. Yeah. Is it there with you on 31st March? Yes. Is it receivable? Receivable. It is already received. No, it is with me already. It is not something somebody is going to give me tomorrow. Right? It is not going to be given by somebody. So this is not receivable. This is correct now, obviously. So since it is not receivable only, it is asset held by me. It is not something receivable. I hope you understand. Exactly. So this is non-monetary item. Correct now. If you say prepaid expenses, example. Yeah, when I say prepaid expenses, prepaid expense, is it receivable? Yes. What do you receive? Service I will get. Prepaid expense. So insurance I paid in advance. Correct. Now something I paid in advance that will come to me as a service or goods, but not money. Since money is not going to come, it is non-monetary item. Correct. Now, yeah. Advance from customers. Yes, you got advance from customer. What have you received? Already received. It is not receivable. It is payable now. How do you pay them? Do you give money back? No, no, sir. I will supply the material, or I will give them goods or services. Agree na? So this is not going to be given in the form of cash. That's why this is non-monetary item. The end of the day, you have to remember this definition properly. If you remember the definition properly, that concept is going to be cleared without any doubt. Hope you understood. Yes, my dear. Now, the next point. Yeah, just a second. Yes. So now the next point, correct. Now let's go to the topic number one. Yes. Sir, how do you record? See, foreign currency transactions. Yeah, foreign currency transactions. Recognition, correct. Now, recognition, measurement. Yeah, I will write it here. Recognition and measurement. Yeah, recognition and measurement, it will happen at a 2 point of times. What are all the 2 point of times? First thing, what we say, initial recognition. I will tell. Initial recognition in the sense, what? First time when you purchase it, first time when you enter into a transaction, first time when you record it, na, that is called initial recognition. Got it? Yeah. So if it is initial recognition, Yeah, if it is initial recognition means at the time of transaction. Initial means what, my dear? At the time of transaction. Initial in the sense at the time of transaction. Understood? So at the time of transaction, what are you going to do? What the standard says, you should record it at the rate, correct na, rate on the date of transaction. DOT I am measuring, writing. DOT, my short form is date of transaction. You record using the rate on the date of transaction. That day, which is the rate? Rate you take it. Sir, closing rate, opening rate. That date average rate, if you take opening rate, you take closing rate, you take, we don't care. All are fine. The standard won't tell average of opening or closing. Standard won't tell about this, but it doesn't matter exactly. See, as far as there is correct, na, how does it matter? Same day, no issue at all. Sir, every day I have to check the rate. Right, or what the standard tell, this is for your convenience. What you can say, you can use average rate also. Average rate of what? Generally average rate of a week or average rate of a month. That is what? Average rate of a week or average rate of a month, maximum you can use it, but not average rate of, I mean, say quarterly basis. No, 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 6 months, no, it won't work. This is also month also huge actually. Okay, fortnight basis, that means 2 weeks rate you can use it. But this also, my dear, the subject to condition. What is the subject to condition? If you are taking 1 week rate, a week may, if the rate is like this, na, not a problem, you can go ahead with. Suppose a week may like this it is going, correct na. So if there is a significant fluctuation, then correct, if there is a significant fluctuation, if significant fluctuation exists, yeah, if significant fluctuation exists, are you getting my point? Yeah, if there is a significant fluctuation is there, what are you supposed to do? Then you should not, correct, don't use average rate. You are not supposed to use it. You are supposed to rate, you suppose rate on the date of transaction. Rate on the date of transaction only you are supposed to use it. I hope you understood. That's it. This is the basic thing. Correct. Okay, sir. Initially, I have recorded at some rate. Right. What will happen, sir? Right. Initially, I recorded. What is the rate you applied? Sir, $1 is equal to 80 rupees. I have recorded the transaction. How did you record it? Aribas, here, normally, what is the journal entry you write for? If it is Indian rupee mein transaction took place, what is the journal entry you write it? If it is purchase, fixed as a fixed account debit to bank or payable or something, will record it. If it is sale, debtor account debit to sales. If it is a purchase, purchase account debit to creditors. Correct. I gave a loan, so loans and advance account debit to cash. I took a loan, then cash account debit to loan account. Agree? Right. Your journal entry is going to be same. There won't be any difference. Only amount is what changing, not the transaction. Journal entry will not change. Okay. So initially, sir, which day you purchased? 1st January. What is the transaction it happened? Sir, I sold goods. Yeah, you sold goods to whom? I sold goods to some US customer. Not a problem. What is the journal entry you generally record? Sir, I will record debtors account debit to sales. I will record. Excellent, sir. How much is the number? Say $1,000 को sale किया. $1,000 into that date rate is equal to 80. 1,000 into 80, that is equal to 80,000 rupees. 80,000 rupees, like that I will be recording it. Nice. So now what has happened? 28th February you have received. What do you receive? 80,000 rupees you will receive. If you receive in 80,000, then where is the translation? Correct na? No, no. The customer has to pay you $1,000. You sold for $1,000. That guy will pay you $1,000. So he must have paid you $1,000. On which day? 28th February you have done this job. Excellent, nice, marvelous. Correct na? But that day, that date, this is receipt is one date of transaction. That date, what is the rate, sir? That day rate is equal to 82, maybe 78, maybe any number it can be. Need not be 80 exactly. If it is 80, there is no problem. Yes, under that circumstance, what are you supposed to do? You received the money, correct? Now it is a cash. It is already converted. Generally, what happens? No, we don't keep it in the dollars only. They will transfer it to our account. Our banker will convert it to Indian rupees and will give it to us. So subsequently, you are not going to translate it once again. Okay, what is the cash? How much have you got? I got $1,000. Today rate is equal to 80, so that is equal to 82,000. Correct. So is it supposed to be debtors account? Yes, debtors. Debtors is equal to 80,000 was the value. Correct. So now he is not liable to pay me. Are you going to pay him 2000 rupees? Why will I pay him? He's supposed to give $1000. He gave us $1000. Job is done. Agree? Exactly. So what about, sir? I got 2000 rupees excess or 2000 rupees less. This should go to your foreign exchange gain or loss account. Correct na? Right. So if foreign exchange gain or loss, you don't need to maintain foreign exchange gain separate account, foreign exchange loss separate account. No, my dear. Not at all necessary. Even schedule 3 may also, they said it is supposed to be measured in net. It is always supposed to be measured at net. Okay, sir, gain should go to my gains, other income, losses should go to my miscellaneous expenditure. No, my dear, it is supposed to be showed in net always. So put it under foreign exchange gain or loss. Correct na? Right. So you should not, they will try to mislead you. Sir, this is arising because of sales. So that's why sales should be credited. Or this is because of purchase. So purchases ko credit karenge. This is because of the fixed asset. That's why fixed asset account ko will do it. Or sir, we will put it under the cost of goods sold. My dear, these are all the ways to mislead you. No, you are not supposed to do that job. It will go to a foreign exchange gain that directly goes to profit and loss statement. Correct na? Either if it is net is a gain, under other income foreign exchange gain it will come. If it is expenditure, other expenses may operating expenses may foreign exchange loss करके ऐसा we are going to show it off. Correct? That's it. Sir, if it is subsequent, correct na? Next is what? Subsequent measurement. Yes, subsequent measurement. So when it comes to subsequent measurement, subsequent measurement means what? Subsequent measurement means it is a measurement on 31st March on the balance sheet date. Yes. When it comes to balance sheet date, how do you do? Right. Let me use this space down. Okay. On 31st March, correct na? On the balance sheet date, what do? You have to look at the trial balance. Correct na? Yeah. Trial balance in the sense basically balance sheet items. Yes. Not the all the trial balance item, balance sheet items. The balance sheet items are going to be classified into monetary item. Correct na? Non-monetary item, NM. You are supposed to classify. If it is monetary item, what is monetary item? Just now I told you, monetary item means or asset or liability which is receivable or payable in terms of money. Correct na? Right. So if it is something in terms of money, receivable or payable, that's why what the standard says. Standard says you are supposed to restate it. Yeah, you have to restate it using which rate? Using the rate. Using the rate. On which rate? Using the rate on the balance sheet date. Yes, you have to use it. Use the rate on the date of balance sheet. Balance sheet date. That is called, people call one more name, closing rate. All are same. Okay, na? Right. You are supposed to use it. Right. When I am restating, yes, I am restating. When I restate it, yes, because of this, any gain can come. Correct na? Any gain can come, any loss can come. That should be charged to profit and loss statement. Are you getting my point? That should be charged to profit and loss statement को charge कर दीजिए. Not a problem. Correct ना? Say example. Yeah, on 31st March. On 31st March, this is my balance sheet. Yeah, this is my balance sheet. Say example, there are debtors. How much debtors are? $1000. When did you sell the goods? Sir, I sold on 1st January. At what rate? 80. So number is equal to how much? 80,000 rupees is there. Yeah, first question, is it a monetary item or non-monetary item? Monetary. Why? Debtor is something you are going to receive it in cash. Agree? So since it is a monetary item, do you need to restate it? Yes, I am supposed to. Correct? I am supposed to restate it. Right. Sir, on the balance sheet date, what is $1? $1 is equal to, say, right, 78 rupees is $1. 78 rupees. Right. Since it is monetary, what are you supposed to do? You are supposed to restate the same. Yes, we'll restate it. Restate in the sense, now 1000, correct. Now what is the restated value? $1000 into 78. That is equal to 78,000 ko leke aana. So when you are supposed to bring it to 78,000, are you reducing the debtor's value? Exactly. Reducing the debtor's value means debtors are support. Debtor shows which balance? Debit balance. So what are you supposed to do? Reduce it by 2000. Then what should I do? This balance number, this is nothing but foreign exchange gain or loss account. That is equal to 2000. Like this one journal entry, you are supposed to record it. Hope you understood. Right. Sir, I purchased a fixed asset. Yes. Yeah, with respect to fixed asset acquisition, my dear, with respect to fixed asset acquisition, also if any gain, this is very important point. Remember, if there is any gain or loss in the if you get any gain or loss in the foreign exchange, yeah, if you get any gain or loss in the foreign exchange, what are you supposed to do? This number should be transferred to profit and loss statement without any doubt. Yeah, but there is an exception to this rule. There is an exception to this rule. What is the exception, sir? ये exception में क्या है? If they are following 46A, 46B or something, paragraph 46 of accounting standard 11, then if there is a separate accounting is there. What is that accounting? I obviously will do now, right now, within few minutes. Okay, right. So chalo, first let me go ahead on the top. Right, if it is a non-monetary item, next question, what are you supposed to do? What is the method of valuation? क्या बोला? What is the method of valuation? First you are supposed to ask yourself. Yeah, sir, how are you valuing the asset? Sir, I am measuring it at cost. Yeah, or I am measuring it at NRV or fair market value, something like that. Yeah, if you say if it is measured at cost, yeah, example, it is a property, plant and equipment, and you are following cost model. Yeah, that means your cost model means you are measuring it at cost. Yeah, under that circumstance, there is no restatement. You don't need to restate it. No restate. No restate in the sense what, sir? Whatever initially you have recognized, initially recognized amount will continue. Initially recognized amount will continue. Yeah, initially recognized amount is going to continue. Are you getting my point? Done. So what about NRV? Correct na? What about NRV or FMV? Now what are you supposed to do? You have to restate it. Restate it. Restate it using which rates are? Using the rate on the date of valuation. Rate on the date of valuation, not date of transaction, date of valuation. Yeah, which date you will value? Normally we will be measuring everything fair market value, NRV, and the closing rate. That's why you are supposed to do the closing rate valuation. Under any circumstance, if you get any gain or loss because you are restating this item, that item, it automatically will go to profit and loss statement, my dear. It won't go to sales account, it won't go to purchase account, it won't go to fixed asset account, it won't go to COGS account. This you need to remember. Okay, right. Now let's go to this paragraph 46, and this, yes, they can ask you a question in the MCQ for sure. Yes, they can, if they really want to check in depth your knowledge. I told you, they can go to any corner of the standard. They can go to scope, they can go to objective, they can go to disclosure. Yes, disclosure also important. Yeah, they can correct. Now, is it right or wrong as per disclosure? Yeah, it's actually troublesome. Remember each and every disclosure, that this and all. No, it's not that easy concept. Yes, so even today also, if you ask me, correct now, do you remember what all supposed to be disclosed under accounting standard 10? If you ask me, no, I can tell you 70-80% is without doubt, but under some circumstances even I also may not be able to tell, but you are supposed to remember. It's a trouble job, but I cannot help you out. Correct na? You have to repeat it again and again so that you will be able to do that. Chalo. So following 46A, correct na? 46A. Right. When can you follow 46A? First. This is correct na? This is actually, it is FC, correct na? Foreign currency monetary items. LTFCMI karke we will use it. What is LTFCMI? LT means long term. Yes, first it should be long term. Next is what? Foreign currency item. Foreign currency item. Next is what? Monetary item. Got it? Right. When they use the word monetary item, my dear. So monetary item can be an asset. Monetary item can be a liability. Yeah, it can be anything. Next. Yeah, monetary item means any one item ko can I selective basis? No, my dear. You cannot go by selective application. Yeah, sir, selectively I will choose something, I will follow this. Sorry, my dear, selective application. Yeah, selective application is not, you are not supposed to follow it. Got it? Yes. Selective application is not allowed. Done. So long term, what do you mean by long term? Obviously greater than 12 months is called long term. Okay, sir, what about short term? Short term foreign currency monetary items be hota na, sir? Yes, short term foreign currency monetary items also will be there. But for this E concept of 46 and 46A, these paragraphs are not applicable. So any fluctuation, correct na? Any fluctuation difference on short term foreign currency item, that should be transferred to profit and loss statement. No discussion. Don't bring those items into this concept. No, because it is meant for only long term foreign currency monetary items. Okay, if it is short term, it has to hit profit and loss statement, not anything else. Done. Okay, sir, what is the next question? Yeah, these are all actually, there are two types broadly. If you divide this information given in the paragraph, it is going to be two type of situations. Yes, what are the two situations? First situation is what? Loan taken. Yeah, loan taken. Loan taken for what? Loan taken for the depreciable fixed asset. Yeah, depreciable fixed asset. Then one way of activity. Now all other. Next one is what? All other. Yeah, what is that, my dear? All other for all other LTFCMI. Any other kind of LTFCMI accounting treatment is going to be different. Next, again, one more small point I have to tell you, my dear. E concept of 4640. Yeah, this is irrevocable option. Irrevocable option. What do you mean by irrevocable option? This is an option, first of all. Nobody will come and force you, right? You use this 46 paragraph. Nobody will tell. Voluntarily, if you will to follow, follow. If you say I don't want to follow, don't follow. That is up to you. But if you follow it now once, then lifetime you cannot come out. Got my point? Yeah, as far as you are in accounting standards, Indian GAAP, lifetime you are supposed to follow. That's why I said irrevocable option. Option to option hai. That's why 10 times you think, does it make sense for you? Then you follow. Otherwise, you are correct. Now, you once you follow, you cannot say no, Tuch, I will come back. No, Tuch, nothing. You cannot come back. Okay, that is first important point. Yeah, if the loan is taken, loan is a monetary item. Then obviously this is a foreign currency loan. Obviously, Indian currency mein loan liya, so why do you come to accounting standard level? Correct. Loan taken for depreciable asset. Yeah, if you have taken a loan must have been taken at one day. That date, one rate must be there. Correct. Na? On 31st March, loan is supposed to be restated. Na? You will restate it. When you restate it, there will be some fluctuation gain or loss. Pakka. Maybe at later point of time when you make a payment to the loan, repayment will you be making or not? Yes, that may be repayment, installment you will pay, something else you will pay. Correct. Now you will repay the loan. When you repay the loan again, there will be some fluctuation difference will come. Yes. So there will be fluctuation. There will be fluctuation. There will be a fluctuation difference. What about this fluctuation difference? Fluctuation difference on restatement. Yes, it could be fluctuation difference on restatement or fluctuation difference arising because of the settlement. Okay, right. Under both the circumstance, what are you supposed to do? You are supposed to adjust it to the depreciable, correct? You are supposed to adjust it to the depreciable fixed asset. What do you mean by adjust it? Adjust it in the sense you are supposed to either debit to fixed asset or you are supposed to credit to the fixed asset. Yeah, if it is a loss, you are debiting to the fixed asset. If it is a gain, you are going to credit to the fixed asset. Okay, so then fixed asset value will be going up or down. Yes. That's why what are you supposed to do? You have to depreciate. You have to depreciate the fixed asset prospectively. You don't need to go back retrospectively when they have capitalized or something. Nothing doing. Okay. Say example, today the fixed asset value is equal to how much? 10,000 rupees. Now fluctuation gain because you followed this method and etc. Suppose 200 rupees has come. Okay, this is equal to 10,200. 10,200 you are going to depreciate it. What is the remaining life? Remaining life, another 4 years life is there, sir. Yes, depreciate it. 10,200 divided by 4 years if you are following SLM method. Agree? That is what you are supposed to, follow. Agree? Done. So what about all other, correct? All other LTFCMI, long term foreign currency monetary items are there. All other things in the sense what? I have taken loan. Yeah, you have taken a loan. Yeah, you have taken loan for what? You have taken a loan for land. Then it is the situation में आ जाएगा. Sir, we gave loan, sir. Yes, you gave loan. Loan means loans and advance you gave it. Yes, you will be falling under E circumstance. Your loan taken only will come, given will not come. What is not in the situation number 1, that will go to situation number 2. This is situation number 2. Two types I told na, second type mein aa jayega. Sir, under the circumstance, what are you supposed to do? Any forex gain, correct? Any forex gain or loss, what are you supposed to do, my dear? You are supposed to transfer it to LTFCMI TD account. Okay, TD. What is this LTFCMI? You already told. TD in the sense what, sir? TD in the sense translation difference account. What is this, my dear? Translation difference account. Okay. I will transfer it to translation difference account. Excellent. So when I say translation difference, what is this? What is this account? Is it a nominal account or a personal account or that account? Or suppose this is a reserve account. This is a reserve account. So where will it be presented? Obviously under reserves and surplus. When I say reserve account, it can be a positive balance, it can be negative. That means it can be debit balance, it can be credit balance, it can show any balance. This much, right? You need to remember. That's all, sir. Not that's all. Correct ना सर? FCMI TD को ट्रांसफर करेगा, but कितना साल, how many years does it supposed to be there? Getting my point? How many years that should be there? Nothing. It should be amortized. Yeah, it should be amortized. You are supposed to amortize it to where? It should be amortized to profit and loss over the period, over the life of the monetary item. Over the life of the monetary item means what? Suppose you gave a loan. Correct. I gave a loan, sir. How many years loan? This is 5 years loan. So FCMI TD should be amortized over 5 years of time. That's all. Nothing else. Over 5 years of time, you are supposed to do that. I hope you got it. Exactly. Right? You are done with topic number 1. The topic number 2 is what, my dear? Topic number 2 will be discussed under the branch accounting chapter, my dear. Okay, yeah, here not required. When I revise the branch accounting chapter, that time foreign currency branch will be there. In case of foreign currency branch, you please follow that. Okay, now topic number 3. What is topic number 3? Foreign currency forward contract. Yeah, foreign currency forward contract is there. Okay, nice. Yeah, what is forward contract? Forward contract means today I have agreed upon the terms and conditions. Correct na? What is that I said? Terms and conditions agreed. Yeah, agreed. When is it agreed? Agreed upon today. Correct na? Before the year end or during the current year. But settlement, when are you going to settlement? Means either give or take. Settlement will be happening at what? Settlement will be happening at a future date. Yes, it is not going to take place today. It's going to take place at a later date of time, later point of time. Have you understood? Done. So now the question. So if it is a topic, correct na? Right. So first, forward contract. What is the purpose of you? One should ask, what is the purpose of the forward contract? Correct. Now, what is the purpose of forward contract? First, you are supposed to ask yourself. Right. What is the purpose? Sir, this is, sir, I have got a foreign exchange risk is there, sir. What risk? Sir, today I sold goods to somebody. Correct na? Right. That guy said, I will pay you after 1 month. After 1 month, when he pays, if the foreign rate, currency rate will fell down, then I have to bear the loss. Correct. Sir, I purchased goods from outside India. Yeah, I have to make a payment after 1 month because after 1 month only I am going to get the money. So when I am going to get the money after 1 month, when I am going to make the payment, what will happen? By that time, for $1, 80 rupees, it became 81 rupee, 82 rupee. Correct? Possible? Yeah, if it goes to 81, 82 rupees, am I going to lose? Yes, I am going to lose. Assume it is not like $10 or $5 of money. It is say $1 lakh of money, $1 million of money. Correct? Now, huge money I am supposed to pay. Mean $10 lakh you are going to pay. 1 rupee change ho gaya to 10 lakh rupees is going to be lost to you. Agree? So that means what is that you wanted to do? You want to hedge yourself. Hedge in the sense you want to secure yourself. Yes. What is the purpose here? Hedging purpose I am going to do it. When it is hedging purpose, my dear, you must have entered into forward rate. Correct na? Right. What is that you are supposed to take? First spot rate kitna? Spot rate means the rate on the date when you entered into forward. What is the forward? Correct na? Spot rate kitna re? Spot rate 80 rupees, sir. Okay, not a problem. What is the forward rate? Yeah, but you have to be very careful, my dear, in this. Are you buying the dollars? Are you selling the dollars? You have to read the question very carefully. Accordingly, gain or loss will come. Got it? See, if you are a buyer, buyer place में seller लिया तो seller place में buyer if you take it, ना, what will happen? 100% gain number will become loss. That's why what are you exactly? You have to decide first carefully. Right? I'll give you one blind rule, normal rule. What is the blind rule, Amma? If you are a buyer of goods, yeah, if you are a buyer of goods is equal to buyer of goods will become buyer of dollars also. Sir, ऐसा कैसा? बस if you buy the goods, are you supposed to pay the dollars? Yes. If you are supposed to pay the dollar, you will go to bank and buy the dollar from the banker. A dollar you are supposed to give it. So buyer of goods is a buyer of dollars also. In the same sentence, what do I say? Seller of goods also. Seller of goods is a seller of dollars. Correct, na? Yes. This is a simple blind rule. You should be careful. Correct. I told you na. If you are a buyer seller situation हो गया तो ना, right? May attempt will become November attempt. You have to be very careful. Okay, in reading the sentence. Yeah. So if it is a forward rate, yeah, forward rate कितना सर? It could be 70, 82 भी हो सकता, 78 भी हो सकता. Who are you? Sir, I am a buyer of dollar. If you are a buyer of dollar, if you had bought today, na, I would have got it at 80 rupees. But since I am buying it at a later point of time, I am buying it at 82 rupees. So E2 rupees, E2 rupees is a loss for you? Yes, it is a loss for me. If in the future I will be buying because of the contract 78 rupees cheap में मिल रहा है, cheap में मिल रहा है तो I will say here minus, this is going to be positive too. Correct na? This is a gain to you. Correct? It is a gain to you. So what are you supposed to do, my dear? This is called, yeah, this is you are paying a premium. You are paying premium. Excess money you are going to pay. Yeah, this is a lesser. Correct? Now you are getting at a discounted money, discount amount. Yeah, you are getting at a discount amount. What the standard says? E premium. Premium means कहाँ से आया? Spot rate minus forward rate. That's it. Nothing else. E difference amount. What are you supposed to do? E difference amount. You are supposed to charge it. Charge it in the sense you transfer it to P&L if it is a gain. If it is a loss, you are supposed to debit it to the P&L. Correct? Na? That's it. Credit or debit, charge it. Charge it to profit and loss. What are you supposed to do? Charge it to profit and loss over the period of contract. Over the period of contract. Okay. What do you mean by that? Suppose I entered in January 1st. One, correct na? January 1st में enter किया. Suppose my agreement is for the April month. April 30th में agreement will be done. So what is the period of this? This is equal to 4 months period. Now the problem is what? Here in between 31st March will come. So suppose you got 10,000 rupees of loss, you got it. You paid excess money. So what are you supposed to do? 10,000 rupees mein 10,000 rupees for 4 months is equal to per month 2,500 will come. E side 3 months are there. E side 1 month is there. So 7,500 rupees will be charged in this financial year. Correct na? Yeah, this may be financial year 2022-23. Yes, this is going to be 2023-24. That is next financial year May 2,500 rupees is going to be charged. Understood? Perfect. And sir, it is not for hedging purpose. Okay, then what is that purpose? Correct na? What is that purpose? Sir, I am doing speculation business. Speculation business. Business hai. Business may gain loss, anything will happen. Whenever you follow, whenever when you read the question, you have to catch it. Are they doing it for the hedging purpose? Are they doing it for the purpose of speculation? You have to catch it. Okay. Yeah. So when I say it is for the purpose of speculation, correct na? Then there is no matter of spot. No, it won't make sense. Spot ka discussion is not there. Are you getting my point? Exactly. Spot discussion is not going to happen. Have you understood? Yes, sir. Spot discussion will not happen. When the spot discussion is not happening, what are you supposed to do? Very simple, appa. Okay, what is the forward rate? Yeah, what is the forward rate? For the remaining period, whatever the forward rate for the remaining period on the balance sheet date. Yeah, sir, 80 rupees on the balance sheet date. Done. Next. That's all, not that's all. Next, balance sheet date rate क्या है बोलो? Balance sheet date rate क्या है? Balance sheet date rate is equal to 82 rupees, sir. Then E2 rupees will be depending upon whether you are a buyer or seller. it can become gain or it can become loss. Correct now? Immediately charge off. That's all. You don't need to bother about it. Immediately charge off. So you don't need number called spot rate kitna, not required. Forward rate for the remaining period of the contract, it will be given in the question obviously. A number ले लो minus balance sheet date का क्या rate है. Correct. So whether you have got it more, I got lesser, you got correct. More or less, I told. It depends upon the whether you are a buyer or whether you are a seller. Yeah. So that you have to be careful. Accordingly, you will be transferring it to profit immediately. Immediately, what are you supposed to do? It will be charged to transfer it to profit and loss. Either correct. If it is an income, it will go to income, profit and loss state. Correct. Obviously, debit or credit, you do it. This is what accounting standard 11. Okay. Chalo. Let's go to the question. Just give me few seconds of time so that I'll go to right page. Which page is this? Then 247. Yes. Chalo, my dear, multiple choice questions. Right. This is, as I told you, this is all given as per the accounting ICAI textbook. Say, correct? Na? This is there. As per accounting standard 11, assets and liabilities of a non-integral foreign operation. This is actually related to topic number 2. Okay. Still, I will answer, right, assuming that you are done with the branch chapter. Okay, right. So assets and liabilities of a non-integral foreign operation should be converted at a rate of non-integral foreign operation. It will be converted at the rate of balance sheet date rate. Okay, right. So what is he saying, my dear? At a rate of opening, closing, average, at the rate of transaction. Generally, we will go by the average rate. Yeah. See, but the average rate for the transactions, e question framing by the ICA is not correct. Okay, sorry. Assets and liabilities, they told, no? Yeah, sorry. Yeah, assets and liabilities, I did not read. I don't know, sorry. Okay, assets and liabilities, they told. Right. If it is a non-integral foreign operation, whether it is asset or liability, we don't care whether it is a monetary item, whether it is a non-monetary item. Everything you are going to apply rate on the balance sheet date. Rate on the balance sheet date rate means that is nothing but closing stock. Okay. Yeah, I did not read carefully. If it is a P&L item, then you are supposed to go by the rate on the date of transaction you are supposed to go. So in the given circumstance, C is the right answer. Yes, perfect. So debit or credit balance of the foreign currency monetary item translation difference, right? That is 46A paragraph. Yeah, right. So debit or credit balance of foreign currency, correct? It is shown as a miscellaneous expenditure. No, it is shown as a reserves and surplus. We told already. Correct? Na? It is shown as a reserves account. It could be negative or it can be positive, negative. I told you sometime before. If an asset is an integral foreign operation, integral foreign operation means what do you do when you purchase books? I mean, when you purchase some goods or services in general, no? How do you account it? Same thing you are supposed to do it. Is carried at cost. Cost and depreciation of the tangible fixed asset is translated at information. Integral foreign operation you are telling, tangible fixed asset you are telling. That means these are the fixed assets which are measured at cost. If it is a measured at cost, then what are you supposed to do, my dear? Yeah, actually, okay. What are you supposed to do? Average rate? No. Sorry. Cost and depreciation. Yeah, I hold. Average rate, wrong answer. Closing rate? No, not right answer. Correct. Exchange rate at the date of purchase. Exactly. Sometime before, just sometime before. I wrote it. Na? I'll show you where we wrote. Yeah, not here. Yes. No restatement supposed to be done. That means initially whatever the rate it is recognized amount, that same amount is going to continue. Here also you see exchange rate at the time of purchase. Yes, purchase initially whatever the rate you purchase, that is nothing but initial recognition rate. Correct? So C is the right answer. Perfectly right. Which of the following can be classified as an integral foreign operation? Everything mostly they have done it on the topic number 2. sorry. Okay, branch office servicing as an extension of the head office. This is obviously integral foreign operation, correct. Independent subsidiary, sorry my dear, independent subsidiary is called non-integral foreign operation. Branch office is dependent on the head office in terms of only operational decisions. Then it is yes. None of the above. None of the above. None of the above is wrong answer. Actually, in this question, it is a dependent in the sense it is an integral foreign operation of the head office in the correct terms of operational decisions. Oh, it is only decisions you are correct now. But generally, you are dependent on means if you have the less number of transactions, you should be having more significant degree of what do you say independence. Then it is non-integral foreign operation. Okay, so the first bit is only right. Here actually the office see the typing issue. It is branch office in no branch office is no. We have to remove the space here. Independent. When it is independent, it is called non-integral foreign operation. Yeah, reading style, I think you must have got it. It is not dependent, it is independent. If it is dependent, it will become integral foreign operation. Okay, right. If you are not done with the branch accounts chapter, no, then you will not get this sums. Okay, my suggestion, nothing to worry, just ignore it. Once we do the, if you are done already, your master has done, or you are following from my classes, if you have referred the branch account, then only look at it. Otherwise, it will be dangerous. Which of the following items should be converted using the closing rate for the purpose of financial reporting? Tell me, items of property? No, property, plant and equipment is a non-monetary item. You should not. Inventory? No, inventory is measured at cost or generally cost or NRV, whichever is lower. No, generally no. Trade payables in foreign currency borrowings. Yes, this is a monetary item. Correct now, because inventory is a non-monetary item which is not receivable or payable, which is the items which where the goods you have already it. Correct na? So that's why C bit is the right. So in this, all the answers are perfect only. There is no, I mean, we don't need to raise a doubt on that. Right, my dear? That's it about today's session. Okay, right. If you like the class, please comment there in the box, comment box mein karo, like it, subscribe it. These are all normal things which I don't need to tell you. Right, if you feel it will be useful future discussion will be useful to you means do it. And if you wanted to get the update about my future yes online these lectures or something, subscribe and just join my group, correct. Yes, you will be getting the updates on that, right. So next standard, next Sunday what am I going to discuss? See, we are done with one, we are done with two, three. I don't need to do it exactly, correct now, right. You are done with what else, my dear? You are done with 4 5. I didn't do it. 6 is not there. 7 8, okay, not required. So 10 is I am done with. 11 I am done with. 16 I am done with. 12 also I am done with, correct na, right, perfect. So let me go to 4 5 and 37. Let me try. These are all going to be the next yeah, next Sunday we will be dealing, we'll try to do 3, but if it doesn't work, not a problem, at least 2 perfectly will be able to complete it. 4 and 5 are the targets.